A warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbaragu. It's Tuesday, the 24th of February. We thank you for joining us at this time on the show.
All right, let's begin with your news now. Mauritius Commercial Bank Limited has successfully closed its inaugural GCC and India-focused syndicated term loan, raising $450 million after strong investor demand. The facility, initially launched at $300 million, was oversubscribed by about 2.1 times, attracting 25 banks, including 5 new lenders. Structured as a 2-year loan with a 1-year extension option, proceeds will support general corporate purposes and the bank's growth across Mauritius and Africa. In central banking news, Nigeria's Monetary Policy Committee has cut the country's key lending rate by 50 basis points to 26.50% as part of ongoing efforts to support the disinflationary trajectory. In a press conference, the Central Bank Governor Olayemi Cardoso said the decision reflects the impact of previous monetary tightening, exchange rate stability, and improved food supply in helping to reduce inflation. Let's listen to him.
The committee decided as follows. 1, reduce the monetary policy rate by 50 basis points to 26.5%. 2, retain the standing facilities corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and 75% for non-TSA public sector deposits. The committee's decision was premised on a balanced evaluation of risks to the outlook, which suggests that the ongoing disinflation trajectory would continue, largely supported by the lagged transmission of previous monetary tightening, sustained exchange rate stability, and enhanced food supply. In reaching this policy decision, the committee took into account the sustained deceleration in year-on-year headline inflation in January 2026, marking the 11th consecutive month of decline.
In other news, Africa's electric mobility leader, Spiro, has secured $50 million in debt funding from Afreximbank alongside new investors, Nithio and Africa Go Green Fund, managed by Signum Capital. The funding follows Spiro's $100 million raised in October 2025, Africa's largest electric mobility investment. The new capital will support the expansion of its battery swapping network and advanced proprietary technology, including automated swaps, fast charging, and renewable energy integration. Meanwhile, the East African Business Council Summit kicks off today, bringing together private sector leaders, policymakers, and regional institutions from across the EAC. The summit focuses on deepening regional integration through private sector-led solutions, with discussions centered on trade facilitation, investment, and harmonizing policies to unlock cross-border business growth. Stakeholders are examining how business can play a stronger role in driving economic integration and building a more competitive East African market. Let's listen.
Over the next 2 days, our deliberations should yield clear implementable recommendations. We must be open to critical and honest about the core issues shaping ESG trade and investments. In particular, we have this shared goal of 40% of our, by 2030 of intra-ESG trade to be achieved. Question marks are around the progress, evidence towards achieving these goals. Also, there's a challenge around accelerating value addition and value chains so as to industrialize our economies to create decent jobs. We have this elephant in the room, the existing non-tariff barriers. We have to stop creating new ones as we try to dismantle the existing non-tariff barriers. We also have to eliminate discriminatory fiscal regimes and harmonize domestic taxes so that we create a predictable and competitive market. And finally, reduce the cost of doing business, close the implementation gap, and strengthen the political will to deliver on agreed ESG commitments. To be candid, integration is not a story, it's about implementation and the discipline towards this implementation. For each day that NTB persists, for every day that border processes are unpredictable, and every time policy reversals are done without consultation, it means two things: that we are taxing our people more, and then we are turning our investors away from us. Over the next 2 days, our deliberation.
In earnings news, Guinness Nigeria PLC reported a net profit of 41.2 billion naira for the 18-month period ended December 31, 2025, reversing a 54.7 billion naira loss in the previous year. Revenues surged 144% to 730.8 billion naira, while gross profit rose 152% to 230.5 billion naira. Operating profit climbed 251% to 89.3 billion naira, supported by pricing strategies, productivity gains, and cost control measures. The results reflect the first full financial cycle under Singapore-based Tolaram's majority ownership and follow the company's transition to a December year-end. In Uganda, the RISE Multi-Stakeholder Forum kicked off today, bringing together key players across the public and private sectors. The forum seeks to drive innovation, deepen collaboration, and mobilize strategic investment as stakeholders work to co-create investable, scalable, and high-impact opportunities across Uganda's economy. From clean energy and agri-food systems to advanced manufacturing and technology, the aim is to turn ideas into action and build sustainable growth. Here are excerpts.
RISE is about breaking these patterns. It brings energy, industry, agriculture, infrastructure, finance, and skills into alignment, designed around real demand and real markets. Because a structural shift does not happen when sectors move separately. It happens when systems move together. This is how economies scale, this is how competitiveness is built, and this is how nations grow. Under RISE, industrialization is technology-enabled, energy-powered, data-driven, globally competitive from day one, and built for genuine sustainability, not optics, not slogans. This is possible now because of how RISE is built itself. RISE is AI native, artificial intelligence native. It learns, it adapts, it improves with use, it scales with demand. This enables economies to grow not only faster but smarter. RISE is about industrialization at a scale delivered at a speed and precision traditional models simply cannot match. Because the future of development will not be powered by theoretical feasibility reports based on abstract assumptions or guesswork. It will be powered by intelligence, integration, and intentional design. So how does RISE translate this vision into action? It begins by seeing the world differently. Every economic, social, or environmental challenge contains the starting point of a real industry. Every constraint points to a business that can be built, scaled, and made competitive. Because remember, every time humanity faces a wall, it invents a door. Rice is about breaking.
In other news, Payasa Africa Limited has opened its up to 50 billion naira Series 1 and 2 commercial paper issuance under its 150 billion naira commercial paper program. The fintech firm provides merchant-enabled payment solutions supporting card, USSD, QR code, virtual account, and mobile money transactions across online and offline channels. Payasa is a certified partner of MasterCard and Visa, with operations across more than 19 countries in Africa, Asia, the Middle East, and North America, backed by multiple regulatory licenses and global compliance certifications. Finally, on News Now, world economies have made limited but meaningful progress in strengthening women's economic rights, according to a new Women, Business and the Law report by the World Bank Group. Over the past 2 years, 68 economies introduced 113 legal reforms, with the biggest gains seen in entrepreneurship and safety from violence. 7 countries also expanded paternity leave to help redistribute caregiving and support women's employment. Sub-Saharan Africa led all regions with 33 reforms, while Madagascar and Somalia removed bans on women working in sectors such as construction, manufacturing, and agriculture. Egypt emerged as the world's top reformer, raising its legal equality score by nearly 10 points after extending paid maternity leave, introducing paid paternity leave, mandating equal pay, and allowing flexible work requests. I am Melissa Enoch, and that's it on News Now this Tuesday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market updates.
Hello, I'm NJ. I'm so happy to talk to you today about what I have coming up next month. On March 16 and 17, guess what? I will be attending the Southern African Oil and Gas Conference in Cape Town at the Central City. This is being organized by the South Africa Oil and Gas Alliance, a platform that has been strong advocates for oil and gas development, not just in South Africa, but across Southern Africa. They've led various initiatives about de-risking South Africa, encouraging investments into Mozambique, Namibia, and even Angola. But here's what's even better. This year, we stand to have discussions around deals, expanding oil and gas development in South Africa, unlocking new opportunities, but also creating that badly needed enabling environment to ramp up investment and drive into not just South Africa, but the region. Our region has been booming. You've seen massive discoveries around the Orange Basin in Namibia, massive discoveries in Mozambique. But even guess what? It's starting to move in Mozambique again. Total Energies is back. That project is ongoing. Rovuma LNG with Exxon, it's kicking off. But guess what? Even in South Africa, we're seeing Total Energies still seeing offshore the Orange Basin and moving. Eco Atlantic, we are not stopping. It means that at this conference, We are going to not just discuss strategies, but also create opportunities. Opportunities for local service providers to be great active participants in the region. Deals to be signed that empower people and create jobs and improve local content and develop opportunities. But even more better, being unapologetic about oil and gas. And you know, I'm not gonna be apologizing for oil and gas. We're gonna go full on drill, baby drill on March 16 and March 17. We're going to stick with a strong Southern African narrative that says that we're gonna unlock the region, open it up for new drilling, drive new energy, and do it sustainably. But guess what? We are going to push for more investment in this region. Because you know why? When we do that, everyday people benefit. Energy companies provide the gas that we need to build LPG plants, urea, ammonia, NPK, fertilizer plants to drive up industrialization in this region. South Africa is still going to continue being that industrialized, the most industrialized nation in the African continent. That is going to drive growth around the 300 million in SADC. Join us at this conference, and I will be supporting our brothers and sisters from Sauga because they're just doing exactly what the industry is at this time. Thank you, and I look forward to seeing you there. And don't you forget, if you forget one thing, remember, drill, baby, drill, all the way. Thank you so much, and God bless you.
Welcome back to Money Moves. Let's now go over to Grace, who is in fact at the FMDQ ticker tape room for our market updates. Hello there again, Grace.
Thank you, Melissa. We are back with Money Moves News now. With Money Moves markets, we begin with equities as usual. The Nigerian Stock Exchange fell 0.91% to 194,484.61, while the BRVM in Abidjan gained 0.55% to 407.08. The Nairobi Securities Exchange advanced 1.02% to 213.02. In South Africa, the Johannesburg Stock Exchange is 0.46%, and in North Africa, Egypt's EGX30 dropped 0.94%, while Morocco's MASI fell 0.37%. Let's do a quick round on some of the Pan-African currencies. The Rand ticked up 0.09% to 16.01 against the US dollar. The Egyptian pound rose 0.08% to 47.80, while the CFA franc added 0.17%. The Kenyan shilling inched up 0.05% to 129. The Moroccan dirham eased 0.06% to 9.16, while the naira strengthened 0.60% to 1,352 naira 93 kobo as at 13:39 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude climbed 0.64% to $71.95, while US WTI rose 0.83% to $66.86. Natural gas slipped 1.01% to $2.96 95 cents, and Arabia gasoline gained 0.25% to $1.99 as at 13:27 GMT. Now, finally, two soft prices. Cocoa fell 3.67% to $2,989. Coffee rose 0.61% to $279.85, and cotton added 0.95%. Palm oil eased 0.08% to $1,031.59, while sugar was flat at $14 as at 13:30 GMT. And that's our money moves markets today. Back to you, Melissa.
Thank you very much, Grace, for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.